Hello guys. I hope you've been good there. It's been a while since I posted a video on this channel. I've been very busy. It's been tough, but I'm back now. And it's a Sunday. There's no way I'll go. We will get to Monday without a video. I always give you a video every Sunday. So if you're new on this channel, basically on this channel, this is where I share analysis, market analysis, tips, and any price action related concepts that I think they are important for you to understand. So I've been doing this. I think I opened this channel in May this year, and the positive feedback that I've been getting, and even from the guys that decided that they want to learn from me, and then they contacted me. So that's why I've decided to continue with the videos that I'm putting on this channel. So if you are new here, make sure that you subscribe and also hit the bell icon so that every time when I make a video, you'll get notified. Let's get started. And also, if you want to, like, if you're interested to learning these concepts in full details, you can always contact me and then we will take it from there. All right, let's get started. So we always start with Nasdaq on this channel because there is Yakala. I saw this past week things have been happening, hey, but it's nothing unusual if you think back to the video that I uploaded last Sunday. Basically it's fine. Let's get from, we always do our analysis from the top because it's important that we first check how the bigger picture looks like, where we are most likely going to go to on a longer run before we can get to the smaller time frames where we'll be executing. Because if I just go straight to my M15, if I'm executing M15 and then I start executing there, I'm going to miss out on a lot of key information or important information on the higher time frames, because the higher time frames is the one that's going to give you the bigger direction, so that when you get down to your smaller time frames, you try and get trades in that direction just to increase your odds, right? So this is how our monthly chart looks like. And for a while now, we've been having this for over probably 5 months now. If you've been on this channel, let's see, we've been having this as our nearest support, and we had that as our nearest resistance. I want you to look at this. This was our nearest resistance until when? Until the day the price decided to go lower than this. Like, it gave us this low by reacting to the same support that I was talking about now, and then it reacted, it went up until there. Yes, it missed the resistance that we had there, and then it came back. When it came back, it moved lower than this. So basically it gave you something like this. So when that happened, that's when your resistance has to shift to this one. So it had to shift to this one. So this is your resistance, and your support at the time was still the same one until the day the price here moved lower than it. Because if you check here, you can see that the price actually did go lower than this point. If you can look at that, this is the low and we did go lower than it. So basically that cannot be our support anymore, because what it has been broken. So if this support that we're having here has been broken, you just have to trace it back until you find the next one, and then that will going to be your next support. So the next support basically is this one here. And if you've been following the news with what is happening around the world, the recession that they're saying it might happen and all that stuff, this indeed has a chance to drop until there, right? It's very, very likely right now with all that is happening around the world. These markets have not been doing well ever since the day or the month when Ukraine invaded Russia. Because if you want, I can give you a little bit of information with how that affected things like Nasdaq. Because remember, Nasdaq, it's more like a US stock that inside it covers things like Twitter stock, Facebook stock, Microsoft, and all those big companies, right? And Apple and everything, right? So now, the day, if you think back to what happened when Russia invaded Ukraine, basically, they decided to say that they're closing their businesses in Russia. So imagine you as an Apple company, now you're losing the markets in the Russian country because you're no longer selling that side. So that's where your stock was going to drop, right? So all those, closing Facebook in Russia and everything, all their stocks dropped. That's why even the overall stock of Nasdaq, it started to move to the downside. Even now, the war is not over, they're saying the recession, that's why it hasn't recovered, because of what? The lost market in Russia. So, but under normal market conditions, we would be moving up like that, because those companies generally, they move to the upside like that. Yes, they will have red candlesticks in between, but overall, they'll be moving to the upside until something happens, right? When that happens, that's when you're like, oh no, now that something just happened. Just like here, I think this was in, no, not this one. I think it was early 2020. Where were we? There was a time when we had things like COVID-19, even when COVID-19 started, and then some of the markets had to close, the lockdowns and everything, the stocks had to drop. They took a knock, right? So even now, this is because of Russia. This, so, but that's a story for another day. Now we like to conclude on like what is happening on this time frame. We will say that the support is here, and it looks very likely that we would get here. Maybe if it would be very nice if the price was to drop to this area around 8,500, somewhere there, and then we restart. Maybe next year, that's when we will have a new move to the down to the upside somewhere next year. We're not saying that once the price touches that we will just go in and enter. We're saying if it goes there, then we will have a chance to enter for long term. Because remember, I always emphasize to say that currently there's nothing that you can say is saying to you can invest for long term. I've been saying this even for giving example with Bitcoin, to say that based on the current structure on Bitcoin and on this Nasdaq as well, you cannot have a buy trade or buy opportunity and say I'm gonna hold it for long term, because currently the structure does not allow you to do that. But if you push and get that discount into the support, at least even if it's not like even if you don't get that opportunity to hold until all the way until the reacts until the because it's going to take more than a year to go back there, even if it doesn't go all the way up there, but at least if you enter it here, you'll be moving up until there. That's a huge recovery for you to go there, the space, right? So that's why I'm saying currently, if you are getting those buy trades, don't try and get too excited and say I'll exit next year. It's possible, but look at what is happening around the world. Look at the current structure here. Do you think it's possible, or it's likely that the price would go up from where it is and just go up like that? It's very less likely. It's possible, yes, but you need to remember that trading is a game of what do you call this, of probabilities, and always lean towards the side where the stuff or the outcome is most likely to happen. So just to conclude on what we are seeing on monthly, this is our monthly support, this is our monthly resistance, and this is our monthly bearish trend line. Okay, I don't know, I shouldn't be cutting through candlesticks. This is our monthly bearish trend line. So we can see that the price is just in between the support and the resistance. The distance between them is still quite far, meaning if you were to get trades to go long, you're not so bad because of what the resistance is up there. But don't make a mistake of trying to hold that and say you'll exit that side, because of what? To start with, your monthly is bearish, right? Even the trend line is there, so you still have a big huge obstacle to go past, which is this resistance and the bearish trend line. So meaning if you are getting buy trades on your smaller time frame, it cannot be for long term. It's just maybe until there, then you're out. Maybe there will be another pullback to the downside until we hit this, because we are saying currently it's very likely that the price can even go to that support, unless if they pull back and then they go to the outside the trend line, then you're like, oh, looks like the structure is changing. It might not even go to the support after all, because of what you are seeing there at the time. But currently, with what we are seeing here, we don't have anything that says these two structures are going to be taken out. But because the space between that support and the resistance, and this being the highest time frame, if you get trades to go long, you can take them, but make sure you don't convert them to be long-term trades. You need to be very careful there. So that's all that I had to make sure that this sinks in, as in like why the price looks like this, why is it dropping, because generally these stocks, they keep on going to the upside, and also why it is important that you check these bigger time frames first before you can get your smaller time frames. So now that you know how your monthly looks like, we're not going to waste time with the weekly. The weekly is also bearish, and remember when we made this video, the last video, we had this, right? And I was saying that we had just broke below where is that, if I can just show you, we had just broken below this low here, this support. We just broken below it here, right? And after breaking lower than it, we get something like this. This is not good. Maybe you could say that we have broken it, but we're still around it. Maybe the bulls will try and recover and push up. But when you start seeing stuff like this, then you're like, no, now it's less likely. We are around the support. Yes, we just broken it. We're still around there. The bulls try to come back. How do you see that they're trying to come back? Because if you look at this candlestick, it means that at some point the bulls pushed until there. At some point, this candlestick looked like that. But before, because this is a weekly chart, before the week ended, they were forced to go back and close here. That's why we have a tail. So because of what happened before the week ended, you can see that that is suggesting that the bears are becoming very aggressive. That's why we have a bearish rejection candlestick. So that bearish rejection candlestick could suggest that the aggressiveness from the bulls, the bears that just finished the week, they can just continue again next week and push to the downside. For as long as when you have that, they still break the range, they can still continue to the downside, of which is what we had here. because that week ended like this. Next week we broke lower than this one, and then that's when we just continued like that. So remember, with what you're seeing here on weekly, like I was saying, remember with what you're seeing on monthly suggesting that it just opened more room to drop towards the next support by breaking the one that was there, right? Because of that side saying we could push to the downside still. Even what you're seeing on weekly, we could still push to the downside because of what? The structure that we're seeing here. Let's just mark our nearest structures. Remember, when you're trading, we always want to mark our nearest support and our nearest resistance. So on this one, this will be your nearest support. Yes, this is your support right there, and it's just being tested. Though that's why even on monthly I said that because we are still quite far between the support and the resistance, if you get trades on your small time frames to go long, you can do that, but don't push it too much, right? Because of what? You're gonna end up trying to have a long-term trade, and the long-term structure does not yet agree with you having long-term trades to the upside. But here we can say the price has just hit a fresh, or not a fresh one, strong support still, but it's not fresh because it was hit there first. And the nearest resistance, you can take that one because this one is a very bad one. It's a very bad one. Those that are in the mentorship, they know why. So this is a very bad one. We would rather take this one as our nearest area of resistance. And you can still put your trend line there and say that currently the price is hitting my very nice and strong area of support. And if I get confirmation there, maybe I can try and push it up until somewhere around that area of resistance or at that trend line. But we need confirmation. We're not going to go in with limit orders because of what the bigger structures are still very much bearish. So we need to have something to convince us that, oh, maybe the bigger structures are about to go for what? A pullback. So you try and catch that pullback on your smaller time frames when you're trading. So that's all that you need to know from your weekly time frame. You will just the weekly, we've just hit the support, we still have a distance to go to the resistance, but the problem is that because the monthly is strongly bearish, we need to be careful with how we enter. We can't go with a limit order. We need to have something to convince us before we jump in. So that is all that you have on your monthly. Let's look at daily. So with regards to daily, when it comes to the nearest structure, you'll just remember this is a weekly one. You can even pick this, which is still the same as the weekly one. So you can still keep the one that we have here. We know that daily is located around there. Daily is also just hitting a daily support, and it is also bearish, just like our weekly and our monthly. That's another thing that we seeing here, and it has a different time trend line there, which is this one here. And the nearest structures, remember we said the support is inside there, as I just showed you now, and the resistance is this one. So this is the daily support, daily resistance, daily bearish trend line, and we just hit the support. We went up and tested the trend line. Now we are coming again. This is not good. This is not good for the buyers. It doesn't look good. That's what I'm saying. For you to go up, there's not a lot of things that are convincing. So we cannot go in, blindly. So you need to make sure that you get confirmation. Because if you look at this, the first touch is always the strongest. Maybe if you had gotten your trade with this touch, you were saying I'm targeting the next opposite structure, being it the resistance or the trend line. In this case, we just went around the trend line and then we turned. So you were gonna exit based on the first, whichever one that is hit first. Between remember the next opposite structure can be your trend line or your zone. In this case, because you're moving up, it will be your resistance. So in this case, you touch the trend line first. That's where you're gonna exit, right? So now you are coming back for the second time, and if you look at how we're coming back, the reason why I'm saying it doesn't look good is because now you are doing what? You are having a strong bearish candlestick that just covered the body of the previous bullish candlestick. So that's what you call a bearish engulfing. So now when you think of buying again, when you've got a bearish engulfing and the zone is no longer fresh, because remember this zone was hit first, it's no longer fresh, we're coming back for the second time, we didn't even consolidate away, we're still coming back again, and that bearish engulfing just makes things even worse. So currently on daily, if you're executing daily, it's not safe for you to do what? To sell, to buy. But if you wanted to sell, you would sell around your key structures of it, your current downtrend, which is that trend line and the resistance. So you hit the trend line, maybe we have executed there, but you will target what still? The next opposite structure, which is this one. You need to make sure that regardless of the trend, a pullback can come at any minute. So that's why you need to know where your next structure is at, so that when it is hit, you just exit. Stay out of trouble. Stay out of trouble. Make sure that you tighten your stop losses at least. so that should anything happen, you are still safe. So we are done with the daily. We just inside the daily support that is not fresh, and we are coming back to it again within a space of like 2 days. And the way Friday things went, we had a bearish engulfing, which now could suggest that the bears could push even further. Even on monthly, remember what I said, we closed lower than that, we still have space to push to the downside. On weekly also, we had that bearish rejection candlestick, and we still had a candlestick moving to the downside, which is also suggesting that we can still push to the downside. And daily also, we are having a daily bearish engulfing, but we just around the support. Maybe if we were to take this out, it will open more room to drop to the downside. But remember, we don't trade against structures. So we cannot just sell and pretend like we don't see this support. Yes, it can be violated, but it is not yet violated. So that's why I said, even if you had gotten a trade around that, because that is your bearish structure, the bearish trend, we're still in a bearish trend. So the bearish structure will be the bearish trend line and the resistance. So if you hit that trend line and then you execute it, you're still targeting the next opposite structure, which is the support. Nothing has changed. So let's check how our H4 looks like, because this is where most of you are going to be spending a lot of time, or even lower than this, depending on the size of your account, right? So let's check how the structure this side looks like in comparison to what we saw on the bigger structures, which is what on your bigger time frames, which is your what do you call this, which is your daily, your weekly, and your monthly. All right, so remember this being your daily trend line, and I said that when you've gotten those buys, that you are targeting the trend line. And if you feel like you want to sell again because the daily is still bearish, weekly still bearish, monthly still bearish, there we touched it. We left with a rejection candlestick, which is what a bearish rejection candlestick, which is what you were expecting value, because of what you are at the bearish structure. So when the bears at that structure start to kick in, they will reject the price, which is why we're saying it's a bearish rejection candlestick. Then they rejected the price, just that the amount of momentum that was here, it makes it difficult for us to analyze, because if you assess what was happening back then, it was easier for us to just make sense of what is happening here, because the candlesticks, they are moving nicely. It's nice movement. And unfortunately, we can't say the same about what we are seeing. We have been seeing since around Thursday and Friday, because of what, when it's moving down, it's just one strong candlestick to the downside, one another one to the upside down, like that. So we don't have nice movements that will allow the price to play out nicely, leave out obvious swing highs and swing lows for us to draw our zones nicely. Because even like currently, if you want to mark your resistance, the support is going to force you to draw something like that, and it's too big, because you can say it's the one that pushed up and then broke all these weird looking areas of resistance. But if we do it like that, it's just too much. It's just too much. We can't mark it like that. We need to have it under control, which means that we need candlesticks that are obvious, nice and tight, so that we have what do you call this, realistic or normal movements, so which is easier for us to mark our structures there. So here we can just say, we will just make our conclusion based on what, because the problem is that if I mark it like this, already it makes it difficult for me to execute here, because of what we just went up until there, we turned back. When you compare that movement with this movement, it's just not worth it for us to execute. So that's why I'm saying you can make your decisions based on what you saw on the other side. So you were saying you're coming from that daily trend line, you're coming to the downside, this is the lowest point you reached. Maybe you'll just see how the price reacts there, but because of what you saw on daily, that daily bearish engulfing, this low might even be taken out, but we will see about that. So if you are executing on H4, you just depend on the structures that you're seeing here. For as long as you're still above there, maybe you can score yourself a smash and grab back to these areas there. But I'm not saying go and buy. No, we don't have anything to point to the upside, because all the time frames are pointing to the downside. For you to enter, you rely on the structures you are seeing here, which means confirmation, confirmation, confirmation for you to go to the upside. So let's check H1. Maybe things will look slightly different there. Well, on H1, we did have this as our nearest resistance, and then we moved up, moved past it. When we did that, it means we left this here as an area of support on H1, the one that is responsible for moving to the upside and breaking what? And breaking the area of resistance there. And again, because we did have movements here that are around the same level, but we had an obvious one now pushing up until there, which means we could even put this, right? And now if this is our trend line, this was supposed to be, you can put it here, your what? It's supposed to be your, what do you call this? your area of support. Now my question is, were you allowed to buy from this support? This is if you're trading H1, were you allowed to buy from that, and why? The questions would be no. Not because I see that the price moved down and broke it. No, I'll tell you why. Number one, remember, this is the daily trend line. The price is feeling the hit from a daily trend line. It's coming back from that. So who am I to try and push against that with the zone that is on H4? So you can't fight the bigger structure with the smaller structure. Number two, the way the price moved after forming that zone, it just moved up and came back immediately without staying up there first. Right? So those are the main reasons why it was not advisable for you to execute a buy there. So now the thing has changed. The price moved to the downside. It broke the trend line. It broke the area of support, which means your H1 is downward, is in a downtrend. In a downtrend, your daily is in a downtrend, your weekly is in a downtrend, monthly is in a downtrend, and all this downtrend is because of the movement that was initiated by this guy here. He's the one that pushed down, broke the support, broke the trend line. Maybe now if the price is to move up to that, you can get your entries there and push to the downside. But even when you're pushing to the downside, remember, you mustn't forget about this guy, because that's why even when we're on H4, I said, for as long as you're still above, the price must still struggle to pass this. And remember, this is not just an ordinary zone. Remember, it pushed up and broke this. So it's quite strong. It's not just a normal zone. It did something. So that's why when you're coming back to it, you can even exit there, because it can still reject the price given what it did the last time the price was there. Which is why it is important to say that I always tell you, when you are trading, you must be able to identify the next opposite structure, so that when I'm in the trade, I don't just get excited because the trade is moving in my direction. No, I need to know. You can't get on a train but you don't know where you're going to get off. That's very risky, because you might end up being furthest away from where you wanted to go. You see? So to make sure that you are safe, you get to your stop, you are out. Because of what? You have reached your destination. The same thing must apply in trading. When you enter a trade, you need to ask yourself, if I'm entering here now, where am I gonna put a stop loss, and where am I planning to exit? Because I cannot just go in the trade and say I'll decide once I'm in the trade. That's poor planning, and even the results might end up being poor. So usually something like that happens when people don't want to miss out on trades. They just want to be in the trade. They say, I've been waiting for this trade for a while, so now I'm not gonna let it leave me now after I've waited for so long for it to manifest, or to become ready, so that I can execute. So that's why I'm always saying that when you are trading, you need to know where you are entering, so that if you know where you're entering, the same way you need to understand that if I'm entering here, where am I targeting? Then you see things are going to be easier. You're not going to trade past anything. You need to understand that those structures are there for a reason. So you're not going to trade like they don't exist. So if you're interested in learning this concept even more, you will just text me there. But otherwise, this is all that I wanted to share with you with regards to what? Nasdaq. And you know how much we love this one. We always go over it. But now, this past week, I've been very busy. I couldn't even give you one video during the week. But I promise that going forward, things will become a bit easier. So I'll be giving you videos here and there, not only on weekends. So, but if you are interested in learning this style of trading, making sure that you are able to approach a chart and make sense of what is happening there, and come up with possible trade ideas or possible directions where the price is most likely to go based on the thorough assessment that you made, then that's my number. I will take you through that. All right, guys, so that's all that you can expect from your Nasdaq this coming week. So I do hope that you have wish you a very peaceful week, and then we will meet in the next video. But if you're new, do not forget to like and subscribe, and also hit the bell icon, especially if you feel like the way I explain things, it's easier for you to understand. It doesn't matter whether you're someone that's new or you've been trying but it hasn't been working out. When I explain, I make sure that you are all happy. All right, guys, that's all that I wanted to share with you today. We'll meet in the next one. Thank you. Cheers.